Traditionally, markets were simple. When people felt confident, they bought stocks. When they felt scared, they ran to protection. And for centuries, that protection was gold and silver. Not to get rich, but to not get wiped out. But let's be honest, most of you don't even understand what you're buying. You just hear gold is safe and repeat it like a parrot with Wi-Fi. These weren't make money assets. These were don't lose everything assets. But now, something doesn't add up. Because while markets have been flying, while everyone's acting confident, gold and silver have been rising as well. And that's a problem. Because these assets aren't meant to party with the market. They're meant to show up when things fall apart. So if your insurance starts behaving like a casino chip, you've got to ask yourself, what are you actually holding? Because insurance doesn't spike, then crash 30% like it's crypto. That's speculation wearing a suit, and most of you don't even realize the difference. Let's strip this down properly, because most of you don't even understand what you're buying. You just hear gold, and your brain goes safe. But gold isn't valuable because it does anything impressive. It just sits there, doesn't produce cash, doesn't grow, doesn't build anything. It's basically a shiny rock that everyone agreed has value. Like passing around the same 20-pound note, just hoping the next person values it more than you did. Now yes, some of it gets used in tech, jewelry, electronics. But let's be real, most of its demand is just people storing money in it. Silver's slightly different, more industrial use, solar panels, electronics. But still, a big chunk of it is just financial. So when you buy gold, you're not investing in growth. You're parking money somewhere, hoping it holds. It's like putting your money in a vault, not to multiply it, but to stop it from being eroded. That's the job. Protection. But now, here's where things get messy. Because lately, these safe assets haven't been acting safe at all. Here's how it's meant to work. Simple. When everything feels good, money flows into stocks, businesses, property. People chase growth. When things start breaking, markets drop, currencies weaken, confidence cracks, money runs to safety. That's when gold is supposed to shine. It's like a fire extinguisher. You don't celebrate it. You reach for it when something's burning. We saw it in 2008. Banks collapsing, markets getting destroyed, and gold shoots up while everything else is struggling. Same thing in 2020. Panic, uncertainty, money printing everywhere. Gold climbs again. Go back further, 1970s, inflation ripping through the system. Currencies losing value. Gold explodes. The pattern's clear. When trust drops, gold rises. That's the relationship. So if gold and silver start rising while everything else is booming, that's like seeing people grab fire extinguishers in a building that isn't on fire. Either something's wrong, or people have no clue what they're doing. And right now, it's starting to look like both. So why did they go up anyway? Because this isn't retail investors being smart. This is governments moving differently. Central banks have been buying gold like mad. Not your average investor. Countries. China, India, Russia, Turkey. Stacking gold reserves like they don't trust the system anymore. Because after seeing assets frozen, currencies manipulated, they've clocked something. If you don't control the system, you don't control your money. So they're moving out of paper and into something physical. It's like taking your money out of a bank you don't trust and hiding it somewhere you can actually access it. Now silver's slightly different. This one's more about demand. Solar panels, electric vehicles, tech, all need silver. But supply hasn't kept up. So price goes up. That part makes sense. But here's where it starts to look stupid. Because after all that, after the steady rise, both gold and silver didn't stabilize. They dropped hard. And that's not what safe assets are supposed to do. And this is where the truth comes out. It wasn't just fundamentals driving this. It was speculation. People piling in using leverage, trying to make quick money off something that was never meant for that. That's like using a fire extinguisher as a flamethrower. And when it started dropping, everything flipped. Because a lot of these people weren't using just their own money. They borrowed. So when prices dipped, they didn't just lose a bit. They got hit hard. That's what a margin call is. You're forced to either add more money or get kicked out of the trade. And most people, they don't have extra money just sitting there. So positions get closed, assets get sold, and prices drop even more. Then it repeats. More drops, more forced selling, more panic. It's a domino effect. Like a row of people standing too close together. One falls, and they all go down. And suddenly, your safe asset is moving like a meme coin. And if this feels familiar, it should. Because we've already seen this exact movie with Bitcoin. Digital gold, that's what they sold you. Hedge against inflation, protection from the system, all that nice sounding nonsense. But in reality, it doesn't behave like gold at all. When markets go up, it flies. When markets drop, it gets smoked. That's not a hedge. That's just another risky asset, pretending to be something else. It's like calling a roller coaster, a seatbelt. You saw it in 2022. Tech stocks drop, Bitcoin drops, liquidity dries up, everything gets hit. Same pattern. Because it's not moving based on protection. It's moving based on hype. And now gold and silver are starting to show similar behavior. That's the dangerous part. Because once an asset designed for safety starts acting like a gamble, you've lost the whole point of holding it in the first place. And most of you are too busy chasing price to even notice. Now here's the part most people avoid because it ruins the whole fantasy. Gold, silver, Bitcoin. They don't produce anything. No income, no cash flow, no output. They just sit there. The only way you make money is if someone else is willing to pay you more later. That's it. That's the whole game. It's like holding a ticket, hoping someone else buys it off you for a higher price. There's no engine behind it, no growth being created. Compare that to a business. A company generates revenue, profits, cash flow. You can actually measure what it's worth. Same with property. Rent comes in, value can be estimated. There's something real behind it. But with gold, with Bitcoin, you're relying on belief. It's like a game of musical chairs. As long as the music's playing, everyone's fine. But when it stops, someone's left standing with nothing. And the longer you stay in that game, the more you're exposed to that risk. But no one wants to hear that, because it doesn't sound exciting. So what's the takeaway? Simple. Nobody actually knows what these assets will do next. Not the headlines, not the experts, not the guy on YouTube shouting price predictions. Because there's nothing real underneath them to measure. No cash flow, no earnings, no way to calculate what they should be worth. It's all based on perception, which means this whole thing is just a game of confidence. And confidence can flip fast. That's why the smartest investors don't rely on this. They stick to assets that actually produce something. Businesses, systems, things that generate money while you sleep, because that's real. Everything else, you're just hoping the next person pays more than you did. And hope isn't a strategy. So before you jump into gold, silver, crypto, whatever's trending, ask yourself one question. Am I investing? Or am I just gambling with a nicer story?